Well, I've been predicting $30 silver for a couple of years. Nice to be right. I've coined the phrase triple-digit silver a decade ago, and I'm seeing people now starting to believe that is actually a possibility. I think we need the metal to stay at $30 for a good couple of quarters, and we're in the weakest period for the metals. You go back and look at 30-year charts. June is always the low for gold and silver, and we've gone out through June, and it held up quite nicely through that period of time. And we're now in July, which is the depths of the summer, generally pretty low volume period. Metals generally don't start to improve until August, September, October. And if silver holds up to these prices over the next couple of months, I'm expecting $35 by the end of the year.
Keith Neumeyer's long-standing prediction that silver could hit triple-digit prices, once viewed with skepticism, is increasingly capturing attention. As of mid-2024, silver was trading at approximately $31.52 per ounce, and though it has recently adjusted to around $29, this still marks a substantial 31% increase since the year's start. This significant rise in silver's value aligns with Neumeyer's forecast, highlighting the metal's crucial role in the green energy revolution and its broad industrial applications. This year's surge in silver prices has sparked considerable speculation about how high they might go in the remaining months. A critical factor to watch is the persistent supply and demand imbalance consistently outstripping supply. Historically, the silver market saw a balanced split between industrial use and investment. However, industrial demand has surged, constituting 64% of global silver demand, a 19% increase from the previous year. The latest figures from the Silver Institute paint a stark picture of the global silver market, forecasting a substantial deficit that could reach 215.3 million ounces by mid-2024. This follows a notable shortfall of over 142 million ounces in 2023, with projections indicating the deficit could nearly double to 265 million ounces by the year's end. The widening gap is driven by a 2% rise in industrial demand alongside a modest 1% increase in supply. The growing reliance on silver for crucial applications in electronics, solar panels, and electric vehicles intensifies this supply-demand imbalance. Despite the potential for high silver prices to enhance sellers' profit margins, Keith suggests this does not immediately translate into increased production. Expanding mining operations is a complex and expensive process, often impeded by lengthy permitting and regulatory challenges. Therefore, while the outlook for silver remains promising due to rising prices and increasing demand driven by green technologies and advanced applications, significant obstacles persist in boosting supply. As we present clips from Keith Neumeyer's interview with Soar Financially, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support and enjoy the video.
Well, I've been predicting $30 silver for a couple of years, so it's nice to be right. I've coined the phrase triple-digit silver, a decade ago, and I'm seeing people now starting to believe that is actually a possibility. I think it should have happened a long time ago. In my presentation earlier today on stage, I was talking about the silver fundamentals and just the fact that even the Silver Institute's suggesting 1.2 billion ounces of consumption in 2024. I've heard numbers as high as 1.4 billion ounces in a market whereby the miners are only producing 830 million ounces a year. So, where the silver is coming from, who knows? But it is showing up in price, which is nice to see finally. And I'm still expecting higher metal prices or silver prices. I don't think it has any impact on supply demand. I think that, because the miners themselves need long-term pricing to be able to have the confidence in making the necessary investments to increase production. And that's not happening. You also need to see governments also get in line with, getting ounces out of the ground, whether it's copper, whether it's silver, whatever metal, zinc, all these metals are very, very important in the green revolution. And, the governments are pushing solar panels, yet it takes 20 years to permit a mine. So if you're a gold company or a silver company, and you have a discovery hole, which we've seen a few in the last year or so, which is exciting to see, and stocks do okay and so on and so forth, and investors make a little bit of money, but that executive team has to finance that asset for the next 10 plus years just to get that thing permitted and get ounces out of the ground. As long as the governments don't get in line, with their rhetoric, because they're pushing all these, great ideas, the green revolution, etc. But yet they make it so difficult for the mining sector. So, at $30 silver is great. We're selling silver at $30 right now, which is, so our margins are looking good. Our profits are increasing. But does it affect supply? No, not yet. So I think we need, the metal to stay at $30 for a good couple of quarters. And, we're in the weakest period for the metals. You go back and look at 30-year charts. June is always the low for gold and silver. And we've gone through June, and it held up quite nicely through that period of time. And we're now in July, which is the, depths of the summer, generally pretty low volume period. Metals generally don't start to improve until August, September, October. And if silver holds up to these prices over the next couple of months, I'm expecting $35 by the end of the year.
Recently, gold and silver have experienced a downturn, but JP Morgan's latest report sees this as an opportunity. They recommend buying these metals on the dip, setting ambitious price targets of $2,600 for gold and $34 for silver by 2025. This upbeat outlook is part of a growing trend among financial institutions, which are increasingly optimistic about the future of precious metals. The current sell-off might raise alarms, but could also represent a strategic buying opportunity. JP Morgan and other financial institutions view the dip as temporary, driven by ongoing economic uncertainties, inflation, and shifts in global financial landscapes. These factors are expected to drive up demand for gold and silver. Both are seen as robust candidates for growth due to their roles in industrial applications and as investment assets. Keith has expressed skepticism about JP Morgan's silver price target of $34. Given the bank's significant role in the silver market, he questions whether this target reflects market realities or is a strategic move. Historically, banks, including JP Morgan, have been known to transfer risk to clients and often present forecasts that may not align with actual market conditions.
Front, we're not going to be using $30 to run, long-term, cash flows. We will do a sensitivity for sure, so we'll know what it is at 30. But when we do an actual valuation on what we should pay for an asset, we'll use some lower number. And probably right now we'd probably use 25, just for argument's sake. It does give us confidence for sure. We have a huge exploration budget. We're spending $39 million in exploration this year. We've got a big development budget. I think $65 million on underground development we're spending. Historically, when we set our guidance and we set our internal budgets, we use metal prices, of course, because we want to figure out how much cash flow we're going to be generating for the upcoming year. And unfortunately, over the last decade, we've always projected too high. Me being a bull, we'd be projecting, $25 silver, and then next thing you know, it's trading at 21, and then we have to start canceling exploration projects. We have to, lay off people. We have to just, wind down the business or wind down the investments. So right now, these kinds of prices, our projections, our guidance is actually lower than the current metal prices. So we're going to be generating more cash than even what we expected, which is always a nice place to be.
Exactly.
With silver at 31 today, we're not going to use 31 for our reserves, because, it's been too short-lived. So what they tend to do is use a 3-year backward average price. We measure that against what the banks are saying as well. Mm-hmm. So we'll look at the big banks, BMO, TD, and so on, and see what their long-term projections for the metal is, and we'll compare that to, and we'll even pick up the phone, and our CFO will call other CFOs of mining companies in our peer group and say, hey, look, what are you going to be using for your 2025 metal pricing? And I just received an email yesterday from my chief operating officer asking me what I'm thinking. So we're now going through that process for 2025. Look at what the banks really do anyways. So, because they're, I'm always suspect.
And just given JP Morgan's role overall in the silver market.
Yeah, they're the biggest player in the space. So, are they trying to suck people in so they can sell more, or they actually believe that they want, I don't know. It's really kind of a waste of time talking about JP Morgan and these other banks.
The surge in silver prices combined with the ongoing market deficits signals the potential start of a new bull market for commodities. The increased industrial demand and its crucial role in green technologies, such as electronics, solar panels, and electric vehicles, drive this upward momentum. As these factors align, the possibility of silver reaching triple-digit prices becomes more realistic. This presents a compelling opportunity for investors, as the metal's expanding applications and supply constraints could lead to substantial gains. Do you agree with Keith's predictions about the silver price? Let us know in the comments below. For more content like this, don't forget to subscribe to our channel, hit the notification bell, and explore our other videos. Thanks for tuning in.